Hi, my name's Dave Price from the True Life Business Stories show, and today's guest is Stuart McKee from ELS. Stuart, good to have you on here.
Nice to have you. Oh God, we start again. There we are. Started already. The pressure of being on film. Right.
The perfect
Right.
start. We'll edit that bit out. So, yeah, Stuart, ELS. Be great. The first question we always start these interviews with is, how do you actually help people?
That's a good question. What we tend to spend a lot of our time doing is guiding people through the different types of finance that's around there. So we are typically an asset finance broker. So we're involved in financing all range of assets in terms of vehicles, IT equipment, catering equipment, whatever the asset might be. But with each finance option comes a number of options behind it. So you might want a loan for it, you might want a hire purchase, you might want to lease the equipment. And a lot of our time is actually spent just making sure customers are comfortable with the solutions that are out there. They understand them from a liability perspective, they understand them from a tax benefit and tax efficiency perspective. So I think that's really where we help and add value. A lot of customers understand the financial world and that we operate in, but a lot don't. And it's such a key mechanism for any business that's looking to grow to actually take on a form of debt to invest in assets. That's ultimately where we help. It's just giving them some pointers, some advice, and making sure they really understand what's available to them.
Right, because I assumed you guys were just sort of finance brokers, and I've had a quick look through the websites, and I was like, oh wow, you do that and you do that, and didn't expect you to do that.
Yeah, there's a lot of different things. One of the key things we did when we set up this business is we looked at the asset finance broking world as a whole and kind of worked out where are there opportunities to support people, where are there niches that we can get involved in. So one of our key demographics is energy. So we fund a lot in the energy space, and as a lot of the news says at the moment, everyone's focused on net zero reduction in carbon. And actually, what we do is we allow customers to facilitate that by financing their projects. So if you look at a typical LED lighting install, we can finance that over a 7-year term. Typically, because of the savings generated by switching from the old lighting to the new, their monthly lease costs are lower than their actual savings. So they get an immediate return on investment. It's cash generative for the business. So I like to think we're not just a standard asset finance broker. We look at niches, we look at solutions, and that's where we really support people.
Right, because just such that example, the idea, yeah, I can go and get LED lighting and the payback. But do you actually have more specific products than just me going to a bank and getting a loan to do that, though?
Exactly. So if you look at a traditional loan, a business loan, as it were, that you can get from any high street bank or some of the, specialists in the marketplace, loans are typically unsecured. So a loan is just an unsecured facility that might give you, say, £20,000. So if you default, if you don't repay that, they don't have any security. Whereas we specialize in asset finance, equipment leasing, whatever moniker you want to give it. And what actually happens is the funders that we use are specialists in that industry. They understand that marketplace and they take their security in the equipment. So, for example, if I was to go and get a loan for 20,000 against an asset finance agreement for 20,000, the chances are the rate will be significantly different in favor of asset finance. Asset finance is a much more cost-effective way to invest in assets. Loans can be used for lots of intangible things. You might have to, with all this weather we've had recently, you might have to repair the leak in the roof. Well, you're not going to get an asset finance agreement to replace a roof. But what you could do is go and get a loan. So this comes back to that first question about how we kind of help people. It's letting them know which solution works best. So you look at what assets can be financed, and I'll give you a quick rundown. But in the hard asset world, you're talking vehicles, forklift trucks, lorries, high-end machinery. Soft assets, you've got phone systems, security equipment, LED lighting, solar PV, all the way through to two of my good friends, and they work for another broker, but they finance dairy cattle. So they do a roaring trade financing cows. And, people laugh at that, but it's such a a sensible financial mechanism, and they do a great business. So any asset can typically be funded. There's always a way to fund an asset, and it is, for me, it's a much more cost-effective way than just taking out standard business loan.
Yeah. And as you say, compared to an unsecured normal loan, you'd expect a much higher rate than a secured loan. Now, I can sort of understand that on vehicles where the security of the vehicle. How does that work with some of the other assets you're talking about?
They basically use the same concept, and this is why we use specialist lenders. So some of the people we deal with are household names, Siemens Financial Services being one of them. So whilst the asset may not have a strong residual value, so if you look at a car, we all know car after 3 years will have an element of value. So that means that the funders are happy to secure against that. Whereas you look at an LED lighting install and you say, well, hold on, surely the luminaires that are installed, there's no value in them. There may be no value in them, but there's a value to the customer. So ultimately, what that funder is looking at is this customer going to repay? That's ultimately their decision, that credit decision. Does this customer have the ability to repay over whatever term we agree with them? And if not, do we have leverage? Not in a nasty way, but do we have something that's going to make them want to pay? Well, for example, with LED lighting, if the customer stops paying, well, the LED lighting gets removed. They don't own the lighting. So it's very difficult to operate in the dark. So that's why funders will look at, telephone systems. The world of telephone systems has changed from the old, kind of big systems we had to voice over systems, and they don't hold much value once they're installed, apart from to the client that owes the debt. And that's the key. And I think that's the difference. So as I say, that's why we deal with the asset finance world is huge in terms of the funders, and they all understand the products. And some funders will only, Intervay are a really good partner of ours. They will only fund hard assets. They really like that space, and they give much better rates because their risk is perceivably less. Whereas some of the other guys will take the higher risk on higher assets. So yeah, you have to have that blend.
Really interesting. Yeah, because I'd never thought of it like that. As you say, the lighting, it might not have a resaleable value, but to the actual individual, as you say, you can't work in the dark. But yeah, never looked at it that way at all. I assume there had to be hard and fast capital in the asset still.
And I think that's something that we've worked on 2 or 3 years is trying to let people know what they can fund. And so LED lighting is something that's probably really come to the fore over the past 7 or 8 years. People knew they could fund their IT equipment. They knew they could fund their coffee machine. They knew they could fund their car. But they didn't know they could fund their LED lighting. And from a customer point of view, they probably didn't want to ask. You can be in that position where if they're going, we've got £50,000 lighting install, and customers may look at it as light bulbs and go, well, am I going to put myself in that position to ask if I can fund light bulbs? Probably not. The easiest thing for them to do is not put themselves in that position. Whereas what we're trying to do, and a lot of work we do with the marketing is not necessarily sell to people, but make them aware of what's available. This market is a great market. There's lots of good funding mechanisms and opportunities here, but people need to know what's available. And that's the key. It's, as you said, you weren't aware of the LED lighting and why people would essentially fund it. But yes, I mean, especially in the energy world, finance makes so much sense because even a solar PV system. So you look at most of the roofs in the UK, they will have solar PV on commercial warehouses. When they have that solar PV on, they're making a saving. They're generating electricity at a much lower cost. Well, actually, as a finance mechanism, anything in a business where you can go, I'm going to pay out £1,000, but I'm going to save 2,000. It's a no-brainer. And that's why, as I say, we've kind of very much, we have a niche in energy, and we really like being involved in that sector because it has that lovely process with it.
Yeah, I'd say I would never have thought to come to somebody like yourself if I was buying 50,000 light bulbs. It's rather think, because it sounds like there's an educational issue about people knowing when to actually talk to somebody like yourselves.
Yeah, and there's some, I was reading a stat, I think it's 90% of the sales done before the customer gets to you, which is fine when you're buying a product. But you don't know what you don't know. So we fund in the commercial sector and give an overview. So in commercial sector, you can have a business loan, you can have a lease rental agreement, you can have a hire purchase agreement. All three of those have different tax advantages and disadvantages. They have all their pros and cons. They have all the ways of working. They may have different rating structures. They have different VAT requirements. So on a hire purchase, you have to pay the full VAT up front. On a lease agreement, you pay the VAT on each monthly payment. So that's where a lot of the education needs to come. People need to understand, and don't get me wrong, there are lots of businesses in the UK that use leasing on a regular basis, hire purchase on a regular basis. They understand the mechanisms, but there's so many customers that don't understand the sheer benefit of it. And that's something, as I say, that's the piece that we work on. And again, one of the key things, one of our key other areas, apologies, is education. So the education sector, the financing mechanisms in that are complex and they are dictated by government. So there's no kind of change. So if you look at, and give you a prime example at the moment, so private schools, they can finance through a traditional finance lease. Academies, so any academy trust can only fund a compliant operating lease. That's the only mechanism, a compliant operating lease.
Right.
And state schools at the moment, because local authorities, this is a scientific bit, local authorities are going to IFRS 16, so that's an accounting standard. They can't fund through operating leases anymore. And there's no word from the government yet. So we don't know how they're going to fund, and the schools don't know how they're going to fund come 1st of April. And this is where, as I say, this is where our support comes in, because we'll speak to those schools, we'll wait to hear from the Education Skills Funding Agency about how they can fund, and then we'll make sure we have the mechanisms, the structures in place to support that. So on the face of it, it's all very simple. But as I say, we bring that technical knowledge, hopefully, as well.
Yeah, just talking to there's much more to this than I ever expected at all.
Yeah, it's an in-depth industry, and there's so many. For me, and a lot of people have issues with debt. Getting into debt and what have you. But if using leasing or hire purchase is all form of debt funding, but what it actually allows people to do is accelerate. And there's an example we used a while back where if you've got a budget of £50,000 for the next year and a truck costs 50,000, you buy it cash. Well, you've got one truck, so that one truck goes and does one contract, and then hopefully next year you'll get another 50,000. You buy another truck, then you can do two contracts. In the same vein, if you're going to spend that 50,000 in year one, well, actually, don't purchase the truck outright. Use it as your monthly payments, over the 12 months. And actually, by leasing that truck over a 5-year period, the payments in year one still add up to 50,000. You've now got 5 trucks. So you 5 trucks go and get you 5 contracts. Then the following year, you get another 50,000. So now you've got 10 trucks and 10 contracts. And your competitor, who's being sensible, and from that point of view, he's only investing his cash if he's got it available, he's got 2 trucks. For me, debt finance used correctly, and it has to be used correctly, allows businesses to accelerate growth. And that is the key. A lot of people, there's an old moniker around leasing, is that, and a lot of people have this opinion, oh no, I don't need to lease, I can afford it. That's not how leasing should be viewed. Never should be viewed as that. Leasing is a clever mechanism to allow you to accelerate growth. And that's how it should be viewed. It may not still be the stat now, but I think it was 90 of the top 100 FTSE companies, the richest companies in the UK, lease lots of assets because it's tax efficient, because they can spread the cost. So yeah, for me, it's about people really understanding where they want to be, where they want to go. And don't get wrong, we have the flip side. We have customers come to us and say, I want to invest in this. And we support them. We look at where they are in terms of their financials. And we say, it's not the right time to invest. We're not going to do this one because we don't think actually it's going to be beneficial to you. So we'll walk away from the deal, not, just to protect the customer and make sure that, as I say, everything they do should make sense. There should be a rationale.
As you say, that view, quite a traditional view that, well, I can afford it, so why would I borrow money?
Yeah.
Again, an educational issue by the sound of things. But is that quite a common thing you come up against, or?
Yeah, as I say, it's the traditional view of we only spend if we can afford it. That's fine. I totally get that understanding. There's lots of really strong businesses in the UK that don't carry much debt because that's how they've grown, and that works for an element of businesses. But there has to be, for me, there has to be a sensible conversation. You can go into the nitty gritty of cash versus leasing or hire purchase, because you could take that same 50,000, say you spread it over 5 years, and you get charged interest on top, and you pay back 60,000. Okay, well that's cost you 10 grand more than it would have if you'd paid cash. Well, if you lease it, your 50 grand cash that you have is still in the bank. Okay, so fair enough. Why not go and get a high yielding bond? If you were going to spend the money anyway, take the 50%, go and put it in a high savings account, if there is one at the time, depending on the interest rate.
Yep.
Go and put it in a high interest rate. Say the interest is 5% a year. So on 50,000, that's £2,500 a year. Yeah. So we won't worry about compounding and everything. Just say it's 2,500 every year. And so over 5 years, that's £12,500. But the leasing's only costing you 10 grand in interest. So you've actually made £2,500 by spreading your cost. It's not I'd like to think it's magic, but it's certainly not. It's just maths.
It's just actually being more creative and putting more thought into the whole process.
Yeah, as I say, that there's lots of different mechanisms, and there will be times when, don't get me wrong, whilst I really do support leasing and love how it can transform not just the customer's business, but actually the suppliers that are offering out equipment. There will be occasions where cash makes sense. It's fine. We don't expect every customer in the UK to lease, but there has to be a sensible conversation, a sensible rationale as to, have you looked at all your avenues? We've had customers before, and another kind of product we do is something called sale and lease back, or a refinance. So this is where a customer's gone and purchased equipment, and then maybe 3 months later, they want the cash back in the business. So what we do is we essentially reverse that transaction that they've gone through, and we take ownership of the kit and we give them the money back. But, we've had it where customers have paid cash, and then they are in that position where they're going, hold on, we've got a huge bill, or we've got this coming in, and we need to get cash into the business. Well, if you'd have asset financed it in the first place, and hindsight's a wonderful thing, if you'd asset financed it in the first place, you wouldn't have this cash flow issue. So yeah, there's so many different ways, and it's very much bespoke to the customer. And I think that's the whole approach. And that's not just me, my peers in the industry, a lot of the guys take the same approach, where we look at it and we go, what is the solution for the customer? Should the customer first and foremost be entering into this agreement? Can they afford it? Is it the right deal for them? And if it's not, we say no. That makes sense. If it is the right deal for them, what's the best structure? Is it hire purchase? Is there tax savings through the government's got the annual investment allowance, you've got fully expensing? Can that equipment be treated under that when you take out a hire purchase agreement, for example? So that's where we very much become a sounding board, and we just help them look at all the different options, and then they ultimately make a choice.
It sounds like you're more of a consultancy firm.
I'd like to think we are. Don't get me wrong, there are transactions where we don't get involved. So a lot of the work we do is with suppliers of equipment. So when we talk about LED lighting, we work with a lot of LED lighting suppliers. So they will go out and we will give them the tools to go and provide their customers with a finance options on it. But the ones I enjoy the most are helping businesses. So we do we work with some people in the aesthetic and beauty industry, and we speak to these customers, and we have a real relationship with them. But you could put a machine into an aesthetic salon, and they will then, or an aesthetic clinic, I should say, that machine could have a severe impact in a positive on that business. They could generate, say, £2,000 worth of extra revenue. That makes a massive difference to some of these smaller clinics, and these smaller clinics suddenly become bigger clinics and bigger clinics and bigger clinics. That's the bit I enjoy the most, is that consultative approach where we can help them see what options are available to them.
Right, because again, just having a quick look on your website, was that right? How much do you want to borrow? And I was like, oh, well, I don't calculate it, but you actually really need to talk to people, don't you? That's just the hook.
Yeah, I think one of the biggest issues you see in this marketplace and in the financial services as a whole is, that old thing of rates from 3%. Well, yeah, rates from 3%. Doesn't give you an upper level, it just says they're from 3%. And how many people actually get 3%? I know there's a marketing rule that you have to have had a certain amount, but we put that, one of the reasons we have that tool on the website, and just for clarity, is I'm very much a person, if I go into a restaurant and there's no pricing, I know it's going to cost me a fortune. So we put it on just to give customers a feel. But the actual pricing, any pricing in terms of asset finance comes down to the customer and their credit. How much, and again, the rates, as the value of the deal increases, the rates from the funders typically decrease. So you get better rates the more you're spending, the more you're investing. It's affected by term. So most agreements we do are from either 2 years to up to 7 years, typically in the energy space. So that will affect it as well. And then, as I say, the customer's credit. So you'll have a wide range of customers from brand new start businesses who will ultimately pay a higher rate because there's a higher risk, with all the stats associated with new start business failures. And then more established businesses or businesses with stronger accounts will get better rates. And again, if they're funding a forklift truck compared to a coffee machine, the rate's going to be better for the forklift truck because the funders that operate in that, that medium will give better rates. So yeah, it's very hard, as I say, we put it on there so at least people can get a feel, and they might just want it for some indicative numbers, but actually rates are very specific to customers. And we try and, our job and part of the thing we work with, we're part of a kind of broker network of independent brokers. And one of the things we kind of very much work on is we have to be giving the best solution to the customer. It's not the best solution for us. It's not the best solution for the funder. It's not who can make the most money or any of that nonsense. It is, what is the best solution for this customer? How can we drive the best deal for them? And if we can't drive the best deal for them, then we're not doing what we should be doing.
Fascinating, because I suddenly see it from two different sides: the direct customer buying, but also the suppliers, as you say, the light bulb makers or whatever. And what percentage of your business comes from direct customers compared to the suppliers?
We're very supplier heavy, so we're probably 70% suppliers, 30% direct. And with suppliers is the key for me is supporting that supplier journey. So any person that sells equipment, capital equipment, even for we fund from as low as £1,000, So if you're selling a machine to a customer and it's £10,000 and the customer's only got a cash option, well, it's a quick, easy story. Have you got 10 grand? No. Okay. Well, that sale's gone. You can't do anything about it. If the customer hasn't got the money, the customer hasn't got the money. Well, actually, Mr. Customer, do you have £220 a month? Well, I can afford that. Well, that's a 5-year lease agreement for the same equipment. So you change the conversation. You take away one of the biggest issues in any kind of sale is cost objection. Everything's too expensive. Everybody wants a discount. So what we do is we support those suppliers to enable them to offer that finance option so they can say to their customer, and a lot of them actually lead with the leasing price because it's much more attractive. Mr. Customer, you can have this piece of machinery for £220 a month. It then makes it, from my point of view, very easy for the customer to weigh up the benefits of that machine. If that machine is going to generate them a revenue, great. What's the revenue? The revenue is £5 a month. Well, hold on. I'm paying £220 a month to generate 5. Makes no sense. Get that. Flip side, that machine is going to generate you £1,000. It's going to cost me £220 a month. Brilliant. So after month one, I'm already quids in. I'm already making money. That money can then be reinvested into the business. Well, actually, why don't I go and get another machine? Because they're only £220 a month. So what it does from a supplier point of view, one, it increases sales value. Yep. Very much for that example. If it's 10 grand machine is 220, well, 2 machines is 20 grand or 440. Again, if they've got a budget of £1,000, they can suddenly accelerate their investment in equipment. That's huge. And then the other thing is getting customers to think about how they can accelerate their business as well. How they can invest in different parts of the equipment. So what we like to do with customers is they might buy a coffee machine, but they can come to speak to us about anything. So what we've done recently with a few clients is we sat down and went, what's your plans for the next 12 months? You know, you've initially leased this, but is there anything you've got over the next 12 months? So they might go, yeah, we need to replace one of the vehicles. It's, you know, it's coming to the end of its life. Great. Okay. So in July, you're looking at potentially a new vehicle for the business. Great. So we can hire purchase that for you and it'll be X. Or we're going to invest in this, that, the other. We are a solution, and that's the key. So we sit behind the customers, we support the customers, and if they want to use our services, they can. If they don't have to. There's no stipulation they have to use it. You know, we very much are a service to kind of support them.
I love that, the whole idea of it, and actually walking through the whole journey with the customer, and it's not just trying to do one product. Question I've got to ask, that sounds very expensive, which how does it work from that side? Because I mean, some people are going to be put off coming to someone like yourself because of an expectation of, oh God, I'm going to pay for that service, aren't I?
Yeah, and that's it. We charge because we're worth it, and that's like the L'Oreal, because I'm worth it. And brokers, and as I say, most brokers in the UK, my peer group, they are worth their weight in gold, because you can, don't get me wrong, if you want a business loan, you can go on the internet. You can go and search now for you could go on there and you could find 5 different ones. How do you know it's right? You don't. You just look in a rate. But that rate, you might go, yeah, that rate's great. Okay. Well, what's the document fee? What's your exit clause? Is there another person that can do it cheaper? Because actually, I've just gone to the first page of Google and I've looked. You can't be expected to know that as a customer, and I get that. But we are expected to know that, and we should know that. And you find in this industry that there's a lot of really good guys, and we have different niches. Some guys are specialists in catering equipment, some guys are specialists in forklift trucks, but they understand their marketplace. So when people look at brokers as expensive, I'd have to disagree, because actually, again, a few of my peers would adhere to this. We're cheaper than some of the direct companies sometimes. It's all about pricing. So if you look at the broker market, we might put, I'll use Siemens as an example. If we put millions and millions of pounds of Siemens of business, well, then we've got an opportunity to go to Siemens and go, we give you lots of business. Can we have a cheaper rate? And Siemens go, well, actually, that makes sense, because you're giving us a lot of business. You make our life easier. So we've got that ability to leverage relationships to get the best rate for customers. So one of the things that brokers do, and so brokers, to be clear as well in terms of commission structures, most brokers don't charge the customer for the services. We don't charge the customer for our services. We're paid a commission by the funding partner we use. So whether that's the bank, the funder, they will pay us a commission, but only on deals that transact. So actually, if a customer comes to me today and says, I'm interested in 30 grand lighting project, can you quote it? Yeah, of course I can. Do that. Can we have a meeting about it? Of course I can. Come and sit with you. We'll spend an hour, we'll go through all the bits, make sure we come talk. Okay. And then they go, do you know what? We've decided not to go to the lighting project. Not a problem, Mr. Customer. If you ever need us, we're here. That's cost the customer nothing. Not a penny. Not a thing. And we don't mind that. That's our world. We get paid a commission, and typically we get different commissions depending on different structures, but we only get paid that if the deal completes, if the customer wants to go ahead. So for me, that's where the beauty of a broker comes in. You've got a consultant, a confidant, someone you can run things past, and you're not getting charged. We're not a solicitor, or not that all solicitors do it, but we're not charging them for a phone call. We're not charging them to go out and see them. We don't charge suppliers for our services. Again, if a supplier introduces business to us, we're paid on that transaction going through by our funder. It's free. It's a free service for the supplier. It's why every supplier in the UK, it doesn't have to be with us, it can be with any broker. Every supplier in the UK that sells capital equipment should be offering a service, a leasing option, a finance option, because it's free. Why wouldn't you do it?
Just because of the level of service you're actually potentially giving customers, and actually taking the time to understand their situation. I assumed there was probably going to be some sort of upfront cost or broker fee that the customer would pay you.
No, that's it. So as I say, the way we're structured, and I can't speak for all the brokers, but the way we're structured, most brokers are structured, they get paid a commission wants the deal transact, and that transacts with their funder. So the customer pays no commission to the broker.
Got ya. Love it. Makes it even more of a no-brainer, really.
But it's you know, and this isn't my quote, but and I don't know who's it, but conversations cost nothing, and that's ultimately what we work on. If somebody wants to call me up now and talk to me for an hour about financing something, and then at the end of the hour they don't want to finance it, that's not a problem. It's not an issue. That's our job. That's what we're here to do. We're here to impart our experience and our knowledge to give customers the options that are available to them, and then they can go make an informed decision. It's as simple as that. It's not, you know, as I say, it's not a service that they have to pay up front for. Our advice is free.
It's really talking to you, because until you talk to someone like that, you don't know what you don't know, as you said earlier, what's actually available.
Yeah, and I think a lot of customers preempt it, as we do as human beings. We go, no, I won't get credit for that, or I won't do this, or I don't think I'd get that. We say, just ask us. We might don't get wrong. We might confirm your initial thought. You might not be able to get it. You know, that's part and parcel of the game we're in terms of credit, might be. But it doesn't hurt to have a conversation. It doesn't hurt to ring us and say, I'm thinking about this. Could you help us? Okay, we can. This is how we do it. Not a problem.
I was going to say, have you got any other examples like that of sort of thing that I probably wouldn't expect you to be able to get finance on at all? Yeah, the light bulbs, that was a new one to me completely.
Yes, I mean, in the energy sector, we do a lot of different kind of kits. So let's say LED lighting, voltage optimization, which is another energy saving product, battery storage, which is the kind of newest buzzword in that industry, obviously, but on a commercial scale. So actually, you know, storing the energy that's generated from solar. You've got a lot. I'm just trying to think of different products. Obviously, because I'm in this world, you know, I kind of get used to it. We got, so as I say, coffee machines, water coolers. We've financed hot taps, so you can get these taps that, you know, instant boiling water and what have you that go into a facility. Genuinely any tangible asset, CCTV. There's one guy approached me about robot security dogs. There you are. That's another one. So
security dogs.
yeah, so instead of having, and everything has a rationale. So instead of having manned guarding, you know, you have men on site guarding, you know, facilities and what have you. You can actually get a dog from America. I've only seen it once, and it's, you know, it's expensive investment, but actually that dog will obviously patrol consistently. It's got cameras. It's all this new age world. But yeah, so for me, it's any tech, any piece of kit you can think of, we can finance it. And that's the beauty, because it means that the range for a customer is significant. You know, if you look at a warehouse or a haulage business, let's call it a haulage business. So that haulage business will finance its trucks. Okay. Do you staff drink coffee? Yeah. Oh, we've got a coffee machine. Do they have do they have somewhere where they go and sit for lunch? Yeah. So do you need a fridge? Okay, brilliant. Do they have uniforms and everything that they need to wash? Yeah, but we don't want them taking it home. That's not really fair on them. Okay, so do you want some laundry equipment that you put in the warehouse? Oh, brilliant. And within the warehouse, have you got lighting? Oh, you haven't. Okay, so let's save you some money. What's on the roof? Oh, you haven't got solar. Do you want solar? Actually, you've got to store a load of products here. Do you want racking? All financeable, all financeable. So suddenly you're allowing businesses to reduce the burden. And this is a key thing that I haven't mentioned. It's reducing the burden on cash flow. Leasing is not a complex product. Leasing for me, and you can tell all the bells and whistles, and you know, we all say the benefits, this, that. You spread the cost and you reduce the burden on your cash flow. Cash flow is king. That hasn't changed I've been on the planet for a while. That hasn't changed in 20, 30, 40 years. Cash flow is still king. Cash flow is still the biggest issue that most businesses in the UK face. And actually, this is just an avenue to say, well, don't put the burden on your cash flow. You need to invest in this. You need to invest in, you know, we finance mobile phones for clients. We finance IT equipment for clients. It allows them to invest in the latest technology without having the cost.
Well, I must admit, I'm gobsmacked on some of the things you come up with there that I never would have crossed my mind at all you get finance for.
But it's the thing is that holistic view to say, what can I finance? You know, what can I possibly finance? Because in my world, the utopia is you finance everything. Finance everything. Have it going out every month. You've got the control. You can invest. You can accelerate your investment. You can reduce your burden on cash flow. You can get tax savings on it. You know, one of the things that stops a lot of people doing it, as part and parcel, is they'll have an old piece of machinery and it'll be failing, and they'll eke and try and get out because they don't want the burden of having to go and pay that big lump sum. Totally get that. Well, then finance it. Finance it, bring in the newest technology that replaces that machine, and away you go. You know, you're not having the burden of maintenance costs, service costs, all those things. There's so many areas and so many avenues that you can go down. It just, for me, it's sensible to always have a conversation. It might, as I say, it may not work for them. That's fine. It's not an issue. But have the conversation, understand it. As I say, conversations cost nothing.
Mm. No, as you said, that educational side of things, people not actually fully understanding what they can finance. If you could talk to someone for 60 seconds, who's probably a little bit like thinks they know a little bit about finance, but again, after this conversation, I'm blown away what you can do. Can you summarize that in 60 seconds or so for us? If you can talk to
60 seconds, the way I talk, I don't know about that. So this is somebody that maybe has got some challenges or concerns about financing.
Running a business, normally used to buying stuff in cash, not aware of the sorts of services you guys could offer at all. So probably never talked to you in the first place. But if you could sit in front of them now and just give them a quick spiel about the possibilities.
So I always like to talk real world. So if you've already purchased equipment, tell me what equipment you've purchased, and what we'll do is run the numbers on it. You know, leasing and finance is numbers. So you've invested £50,000 6 months ago in a truck because that's how you invest. You pay it upfront cash. Right, brilliant. Well, let's work the numbers, work out what that is over a 5-year period. So first of all, you can see that. You can see the interest, you can see the repayments. What challenges have you had in your business in terms of cash flow? Because you've got no cash flow problems and you've paid out cash and you're happy with that, that's not an issue. But is there other things that are pinching? Do you have any pinch points in your business? Do you have bills that need to pay? One of the key things that you need to look at is your bank will lend you money, you know, to a point, and then they'll get to a capacity. So if you're borrowing money from the bank, or you've got an overdraft for the bank, or you've got a loan for the bank, you need other lines of credit. Well, we're another line of credit, you know. So it's very much look at the view, take the view that you've got, fine, and it could be the right view for your business. But let's work the numbers. And for me, numbers never lie.
I love the fact that, again, I never realized that even if someone's bought the vehicle, they can still come and talk to you after, bought the assets, whatever that might be, they can still come and talk to you after that actual purchase.
Refinance is a huge part of the market that we operate in. And again, with the peers in the industry, there's lots of refinance. So you could have a construction company that's got 50 forklift trucks and they want to use, they might not want to use the cash to invest in assets. They might need the cash. We looked at one recently for a customer who's looking to have a management buyout, but they've got to raise the cash to buy the business. Well, if they take that cash that's tied up in the assets and spread that over 5 years, they get the money back. They can then use it however they want in the business. You know, there's so many ways to do things, and refinance is a key one. It's very much done. It's typically done in the hard asset sector. You know, vehicles and forklifts and construction equipment that's got a strong residual value. But yeah, you know, there's nothing kind of stopping it, and as long as it's not too old, you know, you can go back a couple of 3 years.
Wow, love it. Cool. How did you get into this business?
That's a very good question. So I'm, despite my old-looking face, I've been in this industry for 25 years. Yeah, about 25 years. I basically went to work for Leasing, good company, as an office junior when I was 19. It was really just a stopgap. It was a typical, very low-paid office junior job. I used to make the tea, do some filing. It was in the days of fax machines. We used to fax requests and things, and I'd go out and get the cobs. So I kind of thought, well, I'll do that for a bit. And then 10 years later, I was still there. I started off office junior, and the beauty, and I think the reason I enjoy this job so much is I've been the office junior, I've been the admin person, I've been the PA to the salesperson, I've been the salesperson, I've been the senior salesperson. So I've worked in every kind of facet of the job. And then I was at Shire for 10 years. I worked for a couple more brokers. I went to work in the direct funding world. So people like GE Capital, obviously a household name in terms of their size. I set up a branch in Tamworth for a German funding organization and kind of played around the field a bit, learned from different industry sectors. So, did stuff in agriculture, did stuff in media. And then it's got to be 7, 8 years ago, kind of decided I'd worked for enough people. I needed to try and go and do it myself. So, yeah, it's been an interesting road. It's a fun industry, but yeah, as I say, it was completely incidental. I didn't mean to end up in leasing, and never knew I would. So
The number of people who can say that they just fell into that.
yeah,
I mean, what we've been talking about, you guys sound quite unique in what you do. Again, I don't know the market well at all. I mean, is what you've created with ELS completely unique, or?
I'd love to say it is, but it's not, and I have no qualms with that. We are, for my reckoning, we're an extremely good broker. We have a few unique qualities. We have an international presence now, so with things that are happening in the business, we fund across we have access to North America for funding. We fund in Europe. We can support international suppliers. So suppliers that are not just, suppliers might be selling equipment in the UK, but also selling it in Italy, selling it in Canada. We can structure it so we can finance that whole side. So that is a unique proposition. But actually, I think our uniqueness, it sounds a bit wishy-washy. It's in the individual broker. I love this industry. I love it, and I genuinely mean this. There are so many good people in this industry, so many good brokers, so many good salesmen and women that are out there that understand their products, and they do a great job. And I think so. I'd love to say it was completely unique. It's not. What we do is we provide a service that's unique, and it's unique only because it's the only, it's us that's providing it. We're the only people that do it our way. But the industry as a whole is a very good industry. It's very good people in it.
I think it's your approach, that openness and that consultancy approach really seems to set you apart from my perspective. You really actually want to understand the clients.
The thing is, if we don't understand the client, then we're not doing, come back to what I said earlier. Our job is to actually provide the best solution for the customer. As I say, not best solution for my pocket, not the best solution for the funder, the best solution for the customer. And if we don't understand their motivations, we don't understand why they want to invest, we don't understand their business, then we're pricing, we're funding it blind, and that's not necessarily the best approach. Don't get me wrong, not every leasing option needs a deep dive. A lot of customers will go, well, actually, I'm putting in lighting, it's 50 grand. I'm going to save money because the energy audits that we've had conducted. Great. You don't need anything. Here, just make it happen, send me the paperwork, and that's great. That's not a problem. But yeah, that consultative approach, I think, it's the way it should be.
Yeah, I love that example of the factory, the cooker and everything else.
That's it. It's mad. You could actually spend the time, and I will one of these days do a diagram, but everything within there, you can finance with it, with the exception of the shell, which actually can be financed not through myself. There's an industry that does commercial mortgages and buildings and things, but you can have a whole business operation, 80% of it's funded. Well, great, because leasing and finance and everything is an ability to pay as you earn. Pay out monthly as you get your income monthly. There's the old adage, and I'll probably get it wrong, but you don't pay your staff 3 years in advance, do you? You pay your salesperson or you pay your admin person at the end of every month. And for that month, they're working for you, and they generate, they contribute to income, what have you. So then the next month, they do the same and you pay them. Well, it's exactly the same with investing in an asset. You invest in a machine, you use it for the month, and it's generating and it's contributing to income. And at the end of the month, you pay for it. If you find somebody who's paying their employees 5 years up front, I will go work for them, and I'll take my wages 5 years up front, and then I'm off. So yeah, I think it's just, it makes sense.
Yeah, you put it like that. Yeah, it's a complete no-brainer, isn't it?
Mm.
So presumably you can work with huge array of different businesses. Where is your focus in the market over the next year or so?
So our focus isn't traditionally on the type of customer, if that makes sense. So we don't look at customers in specific industries and everything. Because we're very much supply driven, we are very much focused on kind of three, four key areas, I'd say. So energy. We want to work with more energy suppliers who are, selling those products that reduce carbon, reduce emissions, reduce customers' costs. We want to work more and more with them because actually that has a great impact, from a customer point of view. The customers will benefit from having that finance option available. Because of our tie-ups with North America, we're very kind of heavy in the aesthetic industry and the beauty industry. We've got a lot of work to do in those sectors. We do some work in the tech sector, so just the traditional IT model, but I see that being less and less. We'll still fund it, but we've got our kind of irons in other fires. So yeah, energy in that beauty and aesthetics is really the key for us. And then we're trying to do more and more in the education sector. So education, so schools, academies, we've done a lot of work and a lot of business in that sector. And what we're trying to do is now actually support them. So rather than have a transactional relationship with a school where we'll fund one piece of equipment and that's it, we're off, they're off. What we want to do, very much that point I made earlier, we want to sit with the schools and go, right, what's your plans for the next 12 months? You've got to redo the sports hall, you've got to invest in this, you've got to do that. Very much that same process where we go, okay, we can support this element of it, that element of it, and that's a key thing, is to actually have closer relationships with the schools, the bursars, the head teachers, so that they've got, again, a consultative sounding board. They can come to, they can ask questions, they can get the answers they can want, no pressure, no hassles, no issues. Because educating, as I say, with some of the changes in terms of accounting standards and everything, it's going to be a bit of a minefield for the next 6 months. And we pride ourselves on, we go and find out the information for them. We will help support them. So yeah, education, energy, beauty, really our key kind of focus over the next 12 to 18 months. And that international side, we're going to grow that massively, that international presence.
So, the educational side, I was quite surprised to read that on your website. What was the background to getting into that market? Because it just wouldn't have occurred to me.
Yeah, it very much came from the energy side. So when we started working with the suppliers in the energy sector, a lot of their customers are schools, because schools' budgets get hammered. It's public knowledge. We see it in the press. They're constantly under pressure to perform with hardly any budget. But actually, when you're talking about introducing things like LED lighting, where you're generating cash in an education facility. So if you take ABC School, again, just use 50 grand. They put in a 50 grand lighting system, and that saves them, say, £2,000 a month. Well, over 12 months, that's £24,000. And they've taken it out on a compliant operating lease. So they're saving £24,000. Now, I don't know what the teacher salaries are, etc., but that could be another teaching assistant. That's how impactful it can be. And once we started to understand that, then it made sense from a point of view, to go to the education sector. But once you start to speak to people in that sector, in trusts and academy trusts, what you find is that sector heavily leases anyway. They will refresh their IT equipment because schools want to keep at the forefront of technology developing, because they want to attract the best students. They want to, the best students. They want to attract more students. They want to attract, more pupils to come and join their school. So they have to invest in the best technologies, whiteboards from the good old days, and I'm sure you might remember them. But blackboards, blackboards are a thing of the past. All these touchscreen digital things, the matrix kind of things. Schools invest in them because it's a teaching aid. Actually, lighting doesn't just have benefits in terms of energy savings. Well, if the lumen output, so the light that comes out of the luminaire, is changed in a certain way, well, then the kids can actually see better. They can read better. So they're actually learning more because you're enhancing the environment that they're learning from. Schools invest in Tablets. A lot of schools have tablets now. So again, my days of learning, there was no mobile phones. It wasn't chalk and slate, but it was, pen and pad. But they can now invest in a suite of tablets that can really enhance learning. Kids are phenomenal with technology. They're much better than our generation, and they can use that to develop learning. If you invest as a school in equipment that increases your children's grades, that's a no-brainer. There's guys that we know that do these wonderful pens that help kids with dyslexia and dyspraxia and things, and they can use the pens to actually read some of the text. Brilliant. That enhances their learning. That improves their grade. So that whole piece of actually, how can we support schools to accelerate their investments? Well, we provide the finance, but that finance is far-reaching in the fact that, yeah, for us, it's a transactional agreement. But actually, if you look at everything it affects beyond it, you're generally talking about changing the grades, or hopefully supporting the grades of students and increasing them. So why wouldn't we do it? That's always my thing. Why? I'm not a 5-year-old.
That makes total sense. Yeah, the quality of the whatever the business educational facility is actually doing, you can potentially actually increase the quality of that as well, through the finance side of it. Yeah. Wow.
Very good.
Oh, that's fascinating to talk through all of this. So, last question is, if we're going to be chatting it again in 5 years' time, what do you think is going to happen over the next 5 years, and what would you like to happen over the next 5 years, both from ELS's perspective and the actual marketplace?
So from ELS, we're on very much a kind of growth curve. We've got some external investment, got the international tie-up. I want to see this business grow. It doesn't have to be huge. Don't have to be millionaires. I just want it to be substantial enough that it looks after. It's very much a family business. My brother's in the business, my wife's in the business, my sister's in the business. That's key to me. So I want the business to grow to a certain level. It doesn't, as I say, I don't need to be a millionaire. I couldn't spend it. I just, I want to be able to enjoy the finer things in life. I think that's something all people want. But yeah, so just we have got a strong growth curve for the next 5 years. And then the industry's going through so much at the moment. Genuinely, there's lots of, so within our industry, there's lots of regulation, as you would expect, financial services. There's lots of changes with the Financial Conduct Authority. There's lots of, I don't know, there's lots of, not fear, but confusion in the industry about where it's going to go, how things are going to change. There's confusion around funding structures, as we talked about with schools. So I'd like to see some clarity, just some clarity. So the brokers in this industry can see how they're supposed to do things, which way they're supposed to do things. They need some guidance, and it's not coming at the moment. That's very much my thought. They need some support. As I mentioned before, the brokers in the UK, they are some great guys and girls. They're absolutely brilliant. They know their stuff. They support customers. They work with customers, and they need that support, whether that's from the banks they use, the funders they use, the financial ombudsman, the FCA, the networks, the broker kind of networks that they deal with. They need more support, and people need to realize, and I don't think they do, and I genuinely think this is this should be, but I don't think the general public or the business public realize how important the broker community is in this world. We do a hell of a lot for businesses, and they just need to realize how important it is to have a broker on hand.
Yep. And I think the big key from this, if anybody is thinking about getting any assets on board, is really just come and talk to you guys.
It's a simple concept, isn't it? Have a conversation with somebody. We talk less and less. We talk less now with people than we've ever done in our lives. We have emails, we have this, and don't get me wrong, we can have conversations on email. But a 10-minute conversation with a customer can probably answer all their questions. And it might not be, they might have that conversation go, actually, you've confirmed what I thought, I don't want to lease. All right, not a problem. We're here to help. We're here if you need us, and if you don't need us, you don't need us. Not a problem. But we're always open to a chat.
Yep, it's just come and talk to you guys, basically.
Yeah, exactly.
Stuart, it's been really, really interesting talking to you. And I say,
Thank you.
I've learned a lot from this. I thought I'd do a little bit about finance anyway. So yeah, I just wanted to say, yeah, thank you very much for your time, mate. Really enjoyed it.
Brilliant. Thanks for that, David.
All right. Cheers, Stuart.